Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. Me, Ryan Huang. And there's a lot of focus these days on what's playing out in the markets, especially with the backdrop of tariffs, tensions, as well as geopolitics. And some folks have been thinking maybe it's time to rotate away from U.S. markets. Well, one of the popular places that have been popping up is Europe. So that's been getting some attention, but it has also seen a bit of a rise in recent days. Is the ride over, or is there still more to go? Let's check it out with Thomas Rupf. He is the co-head for Singapore and the CIO for Asia for VP Bank. Thomas, good morning. How are you doing today?
Good morning, Ryan. Thanks for having me.
Yeah, it's been quite a ride so far. We are in the middle of the year, so to speak. What has been your takeaway so far? Has it played out according to your game plan?
Well, I think we've seen a tremendous volatility in the first half, right? I think if you look at the market and which news we actually have seen, nobody would expect that we have gained about 9% in the second quarter, despite all these tariffs, geopolitical tensions. So that's at least what we see now in the market. That's really a bit more positive sentiment coming in, and also peak uncertainty on the tariff side seems to be behind us.
Yeah, is it all behind us? So looking ahead to the rest of the year, the second half, are we in for a better second half?
Well, we need to probably differentiate between the market and the economics, right? So basically, what we still expect the economy to slow down. That's also what we expect. Also, this towards the end of the week, we get job data. So also there, we expect the labor market to slow down, not to fall off the cliff, but still we expect growth to slow on a global level. But at the same time, we still expect stocks to hold up relatively well, especially as we also see that the Fed might start to move later this year with the first cut.
Thomas, let's talk about how you've been positioned in the market starting from the beginning of the year. How has that changed in the past few months? And of course, looking forward, are you looking to reposition or rotate because of what we are seeing? Optimism in perhaps Europe is attracting some flows. Conversely, we have been hearing that narrative about the rotation away from U.S. assets. Where are you sitting on this?
Yeah, over the last few months, we have been reducing our high-yield bond position to really get maximum diversification across all asset classes. So basically what we have also been advising our clients to diversify away more into European equities. They are interesting, especially with the defense spending coming up. But what we've been seeing over the last 1-2 months, it's baked into the price. That's also where we get a bit more cautious. On Europe, we would probably more favor some defensive names over cyclicals at the moment. And also bear in mind that a stronger euro, Europe being exporting, Europe being one of the huge exporters, they will be suffering from a stronger euro also there.
Yeah. So
long-term structural trend intact, but short-term focus more on the defensives.
The defense spending, of course, with what's been playing out with NATO and the German policy moving forward, that they might be spending more on defense. Now, when I think about Europe, I also think about luxury. Is there a space you're looking at as well?
That's probably not the one we would go for at the moment. It's really more the healthcare, utility, staple sector, which is currently better positioned versus the luxury side. The luxury side also suffering from a strong euro, as a large of the luxury items are exported to the rest of the world.
Okay, so on that currency interplay, we are seeing some weakness in the US dollar. Are you expecting that to continue further, and how much further can it go?
We expect still further US dollar weakness on our side. It's really linked to the US dollar, to the US dollar debt, to the liability side of the US, and also there we expect the dollar to weaken in the medium term. Further, we have seen now quite a bit of a move the last 6 months with close to a 10% move. So there we don't expect a rapid fall from these levels, but we expect more like a short-term consolidation, but in the medium term that we will still see lower levels, especially against the euro, less against the Swiss franc at the moment. Okay.
Is there a correlation with the strength of the dollar and where gold prices are?
Well, the correlation has kind of, that's the interesting part. If you look at the gold prices, if you look at the gold against euro and Swiss francs, gold was not able to reach new highs over the last few months. So that also shows you a bit that it's really also mainly due to a weak dollar that we have seen the gold strength.
Okay, so we have also been talking about defensive plays as well. Gold has been a traditional destination for many investors. What else is on your, list of options that investors can look at when it comes to to finding a safety in the markets?
Finding safety in the market, it's really about the investment theme. So there we look at the equities which are supported by government spending. So these are really tied to government contracts, which you see in infrastructure, defense. You've seen a huge run in Europe on the defense side, but that's also where Asia becomes interesting if you look at stocks in Japan, in Korea, which have also large players on the defense side. And secondly, also on the energy side, energy as a hedge on the geopolitical side. We also look at multinational energy companies, mainly in Europe, which have a lower cost base to produce than the U.S. shale producers. That's also where there are opportunities there to generate a good yield, good cash yield on it, and at the same time being hedged for any potential escalations going forward.
All right, and of course we can't not talk about AI. We've just seen Meta hitting an all-time high in its stock price. How do you approach the AI theme?
Well, the AI theme, I think the tech theme in general, I think what we have been seeing is also that the earnings are coming through. I think that's also something which has been underestimated, especially in the US, about the earnings side. So there we see better earnings coming through, earnings growth, not only in US, but also in China. And especially if you look at the tech players in China, they're traded at a substantial discount versus the US peers. And China is a bit more, the revenues are mainly coming from the domestic side, which also ring-fences them better from the whole tariff story around it.
Okay, looking to China tech as better value plays, potentially for AI. We've been in conversation with Thomas Rupf. He is the co-head for Singapore and CIO for Asia at VP Bank. Thomas, thank you so much for your time and insights this morning.
Thank you.
All right, great chatting with you. Thank you.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.